Seventh floor.
We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
you on the show.
Wow. Look at that. Another morning
Last
in the
week.
books. Tuesday, the day before Kevin Warsh's first press conference. What do we expect?
Wow. We were so over last week. The week before, we were so back. And now, I mean, we've never been more back than where we are right now.
We've never been more right here, right now than we are as we speak.
Ladies and gentlemen, you're watching The Rollup live from the tokenization tower, The Nest, broadcasting from the future of finance, the financial capital of the world. Today's June 16th. We have a great show ahead. We've got Christian Lopez and we've got Ellie from 21Shares for you all. As always, we're live in the tokenization tower, powered by our friends by Plume, on-chain infrastructure for asset management. Rob, how the fuck are we feeling, brother?
Feeling good. Feeling good. What a morning. SpaceX. So
Last night. Goes
SpaceX
insane.
last night was absolutely, heard more about a gamma squeeze this time on SpaceX. We got options that are launching today. Coinbase is launching tokenized equities. Aerodrome is flying. Back to SpaceX. Man, I think Elon was, you know how 2 days ago the SpaceX IPO went live, the news headlines, everything. Elon's a trillionaire. Well, overnight, he made another $500 billion. I saw he was a 1.5 trillionaire. SpaceX is now more valuable than Microsoft.
Dude, he made Bill Gates' net worth in a single 4-hour candle.
He made Warren Buffett's entire career earnings in one trading session.
Everyone gets bullish, and of course we dump. It's fun, counter trading, retail's emotions. Dude, are you watching the 1 minute time frame, buddy? We are up. We are up. This daily close on hype is gonna be insane.
Yeah.
Like, this daily close is going to be insane. All right, guys, let's get into the topics, the tower, what we got for today. As always, welcome to the tower. Markets and weather live from New York City. We've got the managing director at Cohen and Company talking about a lot of the digital assets M&As coming on the show. And then we've got 21Shares team, head of global research in the tower as well. As always, our topics are powered by our friends at Trezor. Use code ROLLUP10 to get your Trezor today. The intern's got new sounds. He's not even an intern anymore. Our lead man has got new sounds. Guys, let's keep it rolling. Before we do, let me tell you about our friends at Frax. Open, stable, borderless, building the future of finance on chain with stable coins and more. Ladies and gentlemen, what a show. What a show.
Yeah. I'm excited. It's sunny. It's beautiful, both in New York. Knicks are champions. Florida is buzzing as well. It's an exciting time to be alive in the markets, levered up and ready to go.
Unlevered, in my own lane, 71 degrees and sunny, beautiful day outside. Got my house key back. I was locked out of the house for a little while there. Had to crash at a friend's house last night. So we're back.
Per
We are
lockout
back.
trade. That's literally the definition of a lockout trade.
Per lockout trade. This thing is locking out. Hyperliquid lockout rally is on. As always, our weather is powered by our friends at Relay. Use relay.link for your cross-chain swaps and more. It's a beautiful day to have a beautiful day, ladies and gentlemen. Let's get into the markets. Before we do, let me tell you about our tokenized equities partner, Denari, building infrastructure for U.S. tokenized equities, real-world stocks on chain, trade SPXCD on Hyperliquid Spot. Right now, your place to get actual equities on chain with full ownership and full rights. Rob, this digital assets market pricing doesn't even do justice to what's happening in the market.
No,
today.
it certainly doesn't. I mean, this is the last 24 hours presented by Zama, but obviously tons happening over the past week. We've got a big week this week. Not sure when the last time you thought about Jerome Powell was, but he is
been a while.
out. He is out. Kevin Warsh is going to be standing up in front of America and the world tomorrow. And we've got signing of a peace deal in Switzerland happening on Friday. These are the two things that I'm watching from a macro perspective. I'm going to kick it back over to you to tell us what is happening with respect to the technical analysis in the charts.
Yeah, I mean, look, Near is holding up pretty well. Chainlink, Solana, Ethereum, Bitcoin all kind of got a small balance, but yeah, down a little bit today. I mean, Bitcoin kind of killed the rally this morning, pulled back quite a bit across the board, but holistically speaking, Bitcoin's still in a lot of trouble. Like, this would be the place where we would have Bitcoin falter. Like we're back up to the resistance of the previous levels from that February to April range. And if we're truly just like in a full bear market on Bitcoin, it's going to have a hard time breaking this. If we can flip this level and get to the high 60s to 70s, there's a very, very strong chance we blow the lid off this thing a lot faster than people expect and trade up to the 90Ks. Huge opportunity for Bitcoin here. We have to flip this level. We have to flip the high 60s and get into the low 70s and close a weekly up there. Hopefully close the end of the month up there. And there's a high chance that people calling for 40s are gonna have to wait for at least another couple months.
Yep.
But of course, up or down, can't go wrong with that. There's a chance also that this is it.
Yeah, of course.
And so,
of course. Ichimoku clouds and doji candles and cup and handles and whatnot. We're flipping resistance into support.
we need a big move here. We need Bitcoin here.
From a fundamentals perspective, I am looking at this, obviously the Iran war has been sort of like the pie in the sky thing. I think this deal is, and it was supposed to get signed over the weekend. Trump couldn't sign it because he was attending his UFC birthday party. I think the one on Friday is actually going to get signed. And the reason why is because it's not very substantial. Like they're basically saying in this thing that they're proposing to sign on Friday in Switzerland, that they're going to unlock some of the frozen Iranian funds beforehand. I think it's like $12 billion. And they would do that before Friday. Otherwise, there's an additional $24 billion that is still going to be locked. And that is part of what they're going to negotiate after this deal on Friday. And so if the thing signs and closes on Friday, there's going to be another round of negotiations because that kicks off a 60-day ceasefire. It also kicks off negotiations where they're going to argue and negotiate more of these frozen funds and whether they're going to get unlocked. There's this $300 million or $300 billion like remittance fund thing that's going to go back for reparations. That is still not part of that initial deal. That's going to get negotiated.
Yep.
And the nuclear contingency is still to be negotiated. So all of this is still not really part of this initial deal. It still has to get negotiated, which is why I think they're going to sign this initial one on Friday. That's going to kick off another round of negotiations, and then we're still going to have this war. We're still going to have negotiations, but the strait is going to be opened. Oil is going to come back down. The economy is going to heal a little bit. Gas is going to come down. And I think the most bullish thing is that they actually put pen to paper and they do sign the thing. And I think that's going to happen.
Yep. I love it. New Type says, Jito is my bet for Hyperliquid on Solana. He's in Jito, baby. That thing's flying. It's up like 70% off the lows, or at least. More. It's up 50% since Thursday. So what a move there on Jito. I saw Ansem tweeting about that. Obviously, we had them on the show. I think New Type, you probably were on that show when we had Lucas on, the co-founder. So that was a fun one. Look, Wall Street enters today near fresh highs. S&P pumping, NASDAQ up, oil pulling back quite a bit. SpaceX flying. Like SpaceX is doing just insane things. I was sitting here in the office 8 p.m. last night, and this is like the really big light bulb for like me and I think a lot of others. Again, right? You have these moments where you're checking the price action for SpaceX and you're looking at Hyperliquid because it's 8 p.m. and you're like, what is happening? And it was flying. Hit 230. Hit 230. So as always, our markets are powered by our friends at Zama. Visit zama.org to learn more about their privacy solutions. We've got a special privacy day on the show tomorrow for you guys. We've got an insane lineup: Multicoin, Venice, Near, Zama, who else?
T-Rex,
Starkware,
which is doing
T-Rex,
billions of dollars
CK
in
Sync.
RWAs.
Huge.
Canton.
So it'll be a fun one. Canton. Huge show tomorrow. All right, guys, let's get into the news. Before we do, let me tell you about Near.com, your home for building, discovering, and using AI-powered apps on chain. One account, no borders. Your financial life on chain. Visit Near.com to learn more about what they're doing. The thing about buying a Flex watch is you really got to flex with it. So the 10 to 15K Rolexes are a waste of money, because everyone in your circle should have that amount liquid to drop on a watch if they wanted to. But then above 25K, you end up with the same couple models that everyone else has. Plus, you start getting watches that are cooler than a Rolex. But if you're going to own an exotic and niche $35,000 watch, you have to get a few to rotate because otherwise you're the guy who owns one really nice watch and wears it all the time. Okay, so now you're $100,000 into this just to flex on some dudes who don't even care about you if you live or die. Just buy the Psycho, bro. 800,000 views for Charco. Let's give it up for Charco. What a post. What a post. Charco, I got the Psycho, man. This is absolutely nothing. It is a beautiful little Johnny on me. And I agree, man. Watches are silly. They're fun to invest in. Just buy the Psycho or buy the Richard Mille. I mean, anything else in between is kind of silly. Buy the very low end or buy the Richard Mille. Why are you going to buy a $30,000 watch? It's going to hurt if somebody robs you. It's not going to do the job. You're going to be seen as douche. Luxury goods often follow a paradox. You know, the more they're used to signal status, the less satisfying they become. The end game of watches maybe isn't exclusivity. It's owning something that you really like. And that's what matters, Charco. Just buy the damn Psycho, bro.
Sounds like you really related to this one with your Psycho. I don't have a Psycho, but I'm a big fan. Charco's the man. Always comes out there with the bangers.
I agree.
Look, I tend to agree with the take as well. I like the look of a cool watch. I like the engineering of a cool watch. Yes. The only nice watch I have, and it's not like a crazy cool brand. I'm honestly not even sure the brand, but I saw it in the Kith store in South Korea. And it was like this Salvador Dali, like funky looking one. I'm not even wearing it right now, but I like the look of it. It's like the NFT, right? Like, are you going to buy a dumb picture of an ape or a JPEG of something that you don't like, but it's used to signal status? It's probably not a good investment. I like the art. I like the watch.
Yeah. You got to like what you got. You know what I mean? Yeah. All right, let's move on to some serious stuff here. New Type says, really excited for JTX. Solana Perp Dex built with Jito. Yeah, man. I think that is Solana's best chance at perps. And that's why Jito's being re-rated. And I don't think it has much of a chance against Hyperliquid. It's way too early. But it has a chance to have a really, really nice move and revive Solana's value proposition to the market.
So what we have up on the screen here is something that I've been talking about for quite a while, and it comes up every once in a while, but it really feels like now we have the SEC regime in the regulatory position to make something happen. Brian says that it's time to revisit the accredited investor laws in the US. How convenient that he tweets this the day that they launched tokenized equities. Companies are staying private longer. This was also something that Hester Peirce talked about. We haven't posted that episode as far as I understand.
Nope.
And so that is going to be coming out for you guys. I think you're really going to enjoy it.
Yeah, tell us about that, Rob.
Well, I mean, she, talked about why it's important to build out equities on chain. Partly because of what Brian's saying here is that companies are staying private longer. And so we talked about the incentives that are currently at play and how a lot of that appreciation in equities happens for private investors. And so we either have to do two things, one of two things. Either we're going to make companies incentivized to go public sooner so that the public retail audience can get upside to these American companies, or we're going to give retail investors opportunities to access these markets pre-IPO. And there has to be a path in order for these the citizens of America to get exposure to these things. That it really feels as if the SEC is like got the retail investor it's got their best interest at heart.
Yeah, like they care about the retail investor now more than ever.
That's who they work for, essentially. They work for citizens of the US. And so it's a very similar approach. We didn't get into whether or not the accredited investor laws might change, but the fact remains Hester Peirce's her term at the SEC is coming to an end. She's going to law school at Yale as a financial securities laws and whatnot. And so, she's kind of, talking about the legacy that she's going to leave, talking a lot about privacy and, kind of this innovation exemption that she thinks is going to lay the foundation for the regulatory regime to come. So very, 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 just thoughtful conversation. She's a very, very thoughtful person, and I appreciate her spending some time with us on the show.
Yeah, it was great, man. I'm looking forward to dropping it. OG Killer says, why is hype pumping today? I say because SpaceX IPO or SpaceX volume last night was literally over $1 billion in 24-hour period. Like, it was flying at 8 p.m.
Yep.
And it's like, where are you looking for that? You're looking at hyper. There's a bajillion reasons why an asset moves up. It's more buyers and sellers. But like, my reasoning would be that. Dang, LFG, love Hester. J Shep, just found you guys. Digging the media so far. Keep it up with the info, boys. Welcome to the crew, man. Welcome to the crew. Let's give J Shep some love. First time listener. Good shit, man. Welcome. SPX 6900, flip the stock market. Alrighty, Rob. That's where we're at, huh?
Yeah, I think,
Hell yeah, brother. SPX 6900. There is no chart.
Look, I think Brian's got a point here, bringing us back to reality. I do think that retail investors should have access to these markets. I think ultimately this is where we're headed, and we can take some precautions to make sure that we get there safely. I think the SEC is going to put in place consumer protections. Brian talks about two possible routes. Replace the rule with something merit-based. This is the one that I like the most. A financial literacy test. Pass it and you're accredited. Having a qualification based on competency rather than your bank balance or income seems far more fair. You can picture, someone who just inherited a gazillion dollars but has no financial knowledge whatsoever. Why should they be able to go into this? Why are they any more qualified than the guy that has access to AI, does rigorous testing and educates himself or herself? They're obviously more knowledgeable about these markets. Path 2 is to remove the rule entirely, let consenting adults assess their own risk. This is a more libertarian view. Disclosure requirements stay and fraud enforcement stays to punish bad actors. But effectively, look, if you want to smoke a cigarette, you can smoke a cigarette. If you want to, drink a drink, you can drink a drink. If you want to, go 25x long, some pre-IPO market, go for it.
Yeah, I mean, this was so Robbie and I have this venture fund, right? And it is literally in some Caribbean island. And that's because when we started it, we weren't able to do a lot of these deals with a US entity. And that was 2023. So it was a while ago. But in that process, we're now using that entity still, and we don't really think we need to. And so that's just how much the American policy has shifted. And now, I agree, Rob. I think this is going to change drastically. And I think this is the one of many changes that I think will really create a different, more crypto-esque financial market in the future than what kind of currently exists. So I'm bullish, and I'm with Brian on this. And I think the fight over accredited investor rules is really a debate who gets access to wealth creation. And I think that should be, democratized for all. Yeah. So let's get into the next thing. Before we do, let me tell you about Infinify, building DeFi infrastructure for simpler access to on-chain yield, liquidity, capital allocation, higher yields, no leverage. Visit infinify.xyz. Shorting SPCX right now. Pray for me. Prayers. Prayers, brother. Prayers. Love Murad. I also once fell for Murad's antics. Never again.
I don't know if I'd be shorting SpaceX right now.
SpaceX at 216.
I mean, look, it hit $3 trillion. Do I think it's more valuable than NVIDIA? Probably not. But NVIDIA isn't going to space. So we'll see.
But it's the float, Rob. It's the float. That's the question.
Right, of course.
It is a high FDV, low float shitcoin. And I saw the creator of Kaido tweet. He was like, I think CT is going to outtrade retail on this one.
Look, I think there's going to come a point where this thing gets super ridiculous, and it probably comes as the other IPOs are coming online, which is going to happen over the next few months. I tend to trust Good Alexander on this one, who says the way to trade low float, high FDV shitcoins is to short them going into unlocks rather than long them. That makes sense to me. It makes sense. This thing is catching a ton of a bid. It's going to go higher. I wouldn't really be trying to time the top, but I do think the way to do this is you got to look at where we're at relative to these unlocks, because a whole lot of this float is coming online.
Have you spoke on AERO yet? Interested in your opinion. and that is dystopian. Only those with money can get rich, but those with little means can't. WCF. I think that's what Brian's on, right, Rob? Like Brian wants to open up the ability for wealth creation to all. And I think that's part of his character arc. I think that's part of our view. That's why, I mean, I dropped out of college. I didn't have any here's 100 grand, go start trading. I didn't have any obviously, my parents took care of us, but like, it wasn't, we started all of this on our own, and I think like people should be doing the same and thinking about their investment career and whatever it is. And there's at the very least what you can ask for is a level playing field, right? And you're never going to have equally level playing field, but
well, look, I think it is a relevant story actually, because you got to think, well, the accredited investor laws are what they are. Why were we able to start when we did? And we had to look at alternative solutions, right? We've told this story. You were trading on BitMEX, getting liquidated by Arthur Hayes. I was trading on Bittrex, right?
Yeah.
Like there were opportunities available to us, but this was the Wild West. It was totally unregulated. And I think the SEC is looking at this and they're saying to themselves, hey, people see the upside potential here. They want to get involved, especially when we have access to intelligence at our fingertips. The SEC is in a position where they could just continue to leave this thing unregulated, but people would still look for it and they would get hurt. But if they bring this under their purview and they bring these markets onshore and they regulate them, they actually have the opportunity to protect people more. So I think that is the mission of these accredited investor laws. And I actually think that you're going to end up protecting more people by allowing them to trade, because you're going to allow them to trade in a regulated environment. And anyone who wants to trade these things are going to go out, they're going to trade them anyway, whether it's regulated or unregulated. As a regulatory regime, you might as well bring them under the purview of your regulation so that they're done more carefully, more safely.
Yep, agreed. Rob, view on Aerodrome. Have you spoken to Aero? Interested in your opinion? And then we'll get into Jesse here.
Yeah, well, look, Aerodrome is in a spectacular position. They were the number one trading protocol on Base. They completely dominated. And I think, you can say what you want about Base. They had a little meme coin season, an AI season. And I'm not so wrapped up in the value of trading on Base itself. Obviously, they have market share. What I'm excited about from Aerodrome is that they proved that their MetaDex model is the most efficient model at penetrating the market and driving so much adoption. And they were able to do that on Base. We know that they're going to come to Ethereum mainnet. Once they are on Ethereum mainnet, I am a technologist. I believe that liquidity and what will flow to the most efficient technology, the most capital efficient place to trade these things. And I believe Aerodrome proved that they're the most capital efficient on Base, and they're going to go test that theory on Ethereum mainnet. And I think they're going to drive significant market share. The other thing that I think is happening here is that they are expanding their RWA and their tokenized equity
fast
mechanism, and it's happening fast. And we saw what happened with Coinbase, and we know that because Aerodrome is massive on Base, they obviously are part of the Coinbase cabal. And so Aerodrome is poised to capitalize the most from the recent Coinbase announcement that happened just today. And I think Brian Armstrong is actually going to be speaking at around 3 p.m. today, so in about an hour and a half, talking more about the tokenized equity strategy. I expect Aerodrome to be a significant part of their tokenized equity strategy. Obviously, this is part of our neo-finance thesis, stablecoin super cycle. You tokenize all of the assets. Those assets end up in our most prominent and resilient DeFi protocols. And then you re-rate these protocols because they're no longer just pricing liquidity for crypto native tokens, they're pricing liquidity for the entirety of the financial market. And that is trillions and trillions and trillions and trillions and trillions of dollars. So that is happening. The third piece of this is, you had, I think, was it Standard Chartered, give a 40x to Uniswap. Look, if they're giving a 40x to Uniswap, and we believe that Aerodrome is going to eat into the market share that Uniswap has on Ethereum mainnet, and they're going to benefit from this Coinbase tokenized equities announcement, I believe that you have an even higher potential multiple for Aerodrome, right? Because they already, Uniswap already has some market share. If you believe that Aerodrome is going to eat into that market share, I think there's an even higher multiple at stake. So I think you have this three-headed monster. I think Ethereum in general is also starting to benefit, and you're starting to, see it maybe sweep up off the lows. So the rising tide of Ethereum is going to lift all DeFi protocol boats. I think Aerodrome is going to penetrate into the DEX market share on Ethereum. I think you also have it proving out its MetaDEX market share. That is going to work on Ethereum, in my opinion. And then you have the tokenized equities super cycle that is going to be driven by Coinbase and the like. I think this is just a cascade of tailwinds around Aerodrome. So I have a,
and then I would just throw in there
I have a position and I'm bullish.
I would just throw in there that, the chart looks insane. We're breaking above 50 cents right now. This is a massive, massive bottoming formation putting in since February of 26. So it's been 5 months or so, 4 months, just kind of chopping around at these lows. If we take out 55 cents with a strong weekly close, guys, this thing could send all the way to $1.25.
The only other thing I'll say about Aerodrome, and I think that they have, more than just the MetaDEX launching on Ethereum. They have, this predictive allocation stuff, which is really, really compelling. Their ecosystem is so deep. And I think this is one of the things that early DeFi protocols on Ethereum back in DeFi summer 2020, 2021, I don't know if it's fair to draw the comparison, but Curve is probably the best comparison. And then you've got Ohm and Wonderland and Time and all of these crazy things. The thing is that there is a really, really deep rabbit hole to get into rather than just buying and holding the asset. And you can certainly buy and hold the asset. And frankly, that's all I'm doing right now because, I want someone from Aerodrome to come on, and you just had Alex in the tokenization tower, but there's a ton of education to be done around the Aerodrome ecosystem because you've got VE AERO, and Aerodrome is passing back. I don't know if it's 100% of the value from the liquidity on its protocol, but it's passing back a lot of the decentralized exchange revenue that they're generating. And they're generating a lot. So I think it's millions of dollars that they're passing back to the token holder on a recurring basis. And you get that by holding the token, but you can really earn quite a bit more by doing some fun strategies with VE AERO. I'm not knowledgeable enough to really talk about what the best strategies are, but I would implore everyone to go educate themselves and learn about how to deploy their AERO in the most efficient way possible. It looks like I'm up here solo, so I could keep ranting about Aerodrome. We're going to get our next guest in the studio very, very soon. Why don't we kick it over for our next tweet? We're going to get that going because there's quite a bit happening in the AI world as well. And so let's hear from our friend Capital Flows on how to think about the fundamentals behind these semiconductor stocks. This is another cohort of assets that are doing quite well on Hyperliquid. Obviously, SpaceX caught a hell of a bid on Hyperliquid, and the price discovery was extremely relevant. $1 billion in volume over the last 24 hours. Let's go ahead and play this Capital Flows video and see what's happening with these semiconductors.
Now, notice here is a chart of the semiconductors of the S&P 500, but not just that, but it's also their earnings expectations in blue right here. Notice that earnings expectations have actually been rising during this entire time of the equity melt-up in the semi space. Now, just think about how if you don't know this data point right here, then you might think that this is like a 2000 equity bubble environment. You might think, oh, well, this is just an equity market melt-up. These companies are non-profitable. They're never going to do anything. They can't do anything. Then and saying, okay, we're going to be at a market top soon. If you just have this one data point right here and understand it, immediately you now have a view that says, okay, you know what? This is not like 2000 because there's actually underlying earnings that would justify and provide insight around the valuation component of markets. Now, there are maybe some elements of continuity, but there's still elements of discontinuity. And this goes back to the entire IPO of SpaceX and how everyone got super bared up into the IPO of SpaceX. And they didn't ask ask what the underlying mechanics were.
Yeah. Well, great clip from the fellows over at Capital Flows. These guys know what they're talking about, and I think Capital Flows does a really good job of harmonizing between technical analysis and fundamental analysis. He's sort of drawing comparisons back to the 2000, 2001, .com bubble. And he's talking about if you're only looking at the stock price, right? And you're just looking at the price on a chart, and you're looking at that in a vacuum, you might think, oh my gosh, this thing is going parabolic. How much longer can this go up? It must come down at some point. However, if you tie in some of the fundamental analysis here and you look at, some of the financials behind these companies, you'll realize that earnings are going up as well. And I think that is an important fundamental component to the way that we're valuing these companies, these stocks, and this applies to tickers as well. It doesn't just apply to semiconductor stocks, but it also applies to AI, and it applies to tokens. And so if we're looking at this, don't just look at the price. Look at the fundamentals here. And you can look at Hyperliquid and Aerodrome, for that matter, as great examples of this. These guys are driving tons of revenue. And so the way to value these things is going to be price earnings multiples, right? You look at the stock price or the token price, you look at the earnings of that protocol or that company. How much more is their price relative to their earnings? If that multiple is expanding, then you got to be concerned about bubble, or is this thing becoming overvalued? But you can actually have the stock going up or the token going up and the multiple compressing because the earnings are offsetting and outperforming the price. And that is what I think you want to look for, because that is going to tell you whether or not we're becoming overvalued or undervalued. And the most traditional of traditional investors will tell you the same thing. They'll say, hey, the same applies to the downside. If you see a stock that's underperforming, but you see the financials of this company, they're just making money hand over fist, but for some reason the ticker isn't going up. Well, that is going to signal to you that the market is just not really understanding or pricing this thing efficiently. And there's your opportunity, right? And I think, Capital Flows is talking about this relative to semis. Earnings on semiconductors are doing extremely well. And so despite their rise, Capital Flows is arguing that these things aren't overvalued because their multiples haven't been expanding. If anything, they've been compressing. So you got to really parse out the different things here. You've got the price itself, you've got the earnings, and you've got the multiple. And if you're looking at something's overvalued or undervalued, whether you should take a position, pay more attention to the multiple and whether that's expanding or contracting. And that is going to tell you whether this thing's overvalued or undervalued. And the same, now that we have revenue in digital assets, the same goes for tokens. All right, let's see what we've got coming up next. We've got our friend in the tower. He is going to be coming very, very soon. That is Christian Lopez. He's got a hard stop at 2, so we're going to get him up very, very soon. Let's check in with Mert one more. Let's give a shout out to LeFi before we check in with Mert. LeFi is our liquidity and market orchestration partner. These guys are the market access for digital assets, universal liquidity engine. They can pull in liquidity from wherever you need. And I'm excited about the RWA strategy from these guys as well. Very similar to Aerodrome for all of these DeFi protocols. Remember, stablecoins get tokenized, RWAs get tokenized. All of a sudden, we have trillions of dollars on chain. Our DeFi protocols are going to need to reprice and re-rate for the expansion of these assets on chain. This goes for infrastructure. We're going to need to orchestrate and compose all the liquidity in all of these assets. And then it also goes for all of the DeFi primitives and protocols that we have grown to know and love as well. Mert is saying this is absolutely insane. The UK now proposes scanning of all private content on user devices or jail for the executives of these device companies. We've heard from Pavel from Telegram. He is fed up with these laws. I think the French government was coming after him. Okay, recall how the French already arrested Pavel earlier this year? Yep, exactly. This is on a device level, meaning you cannot even use the phone freely unless you literally KYC. Does not matter which apps you use. On top of this, they will require another KYC submission on the app level to access certain apps. So this would mandate both device level and app level surveillance. Guys, I am concerned about surveillance and censorship. Had the UK ban social media for 16 and under year olds. No matter your perspective on whether you think this is going to be helpful or harmful for the mental health of our youth, I think doing this in such a way is going to be detrimental. I am of the view that parents should be the ones to implement this, not the government. Don't like the government telling me what to do. If I have a kid, they're underage, I, as a parent, should be the one to tell them what they are allowed to do or not. Once they're of age, they can decide for themselves, but the government should not be doing this. Same goes for device and app level. And when it comes to AI models, right? We saw the US government censor the Mythos Anthropic model. That sent the market into a tizzy over the weekend. And so we're going to see a lot more from open source models. I mean, the censorship resistance, the price difference, for only incremental, almost negligible degrading of service from these open source models. I think the US needs to get better at not letting the Chinese open source models distill what is happening in the frontier US market. This is still working itself out, but we're going to see the censorship resistance in the US on our AI models, and in the UK and in Europe on social media and on the app level, and then obviously on the device level as well. We need to solve these censorship issues. Guys, we've got our next guest live from the tokenization tower. We are going to get him up with Andy. This is going to be Mr. Christian Lopez, who is very familiar with the DAT ecosystem in digital assets. Guys, he's going to be in the tokenization tower for a great conversation. Don't go anywhere.
Ladies and gentlemen, we are here, Tokenization Tower, with Christian Lopez. Christian, welcome to the tower, man.
Thank you.
Not a bad view for the boys on a fine Tuesday.
This is amazing.
It's great to have you.
Well, thank you for having me. This is awesome. Awesome view. I think
appreciate it.
This looks fake.
Yeah, no, I mean, we do get asked if it's a green room, so thank you for joining us in the flesh here. I know you have quite the experience with your company doing a lot of digital asset mergers and acquisitions, and this has been a prominent theme throughout the bull market, and then also in the bearish phases, you kind of get this consolidation. And so I wanted to start this conversation with a conversation that I had last week after Blockworks acquired Masari. And what the CEO of Blockworks told me was that in this current market, there is a lot of consolidation happening, and there are the consolidators, the ones acquiring, and effectively the consolidatees, the ones being acquired.
Yeah.
And this is typical for a bear market. And then in the bull market, what you usually get is like a lot of kind of like TradFi institutional level clients or firms buying crypto companies. But we've seen less of that in the last 6 months, and probably more of this kind of like internal acquisitions. How would you describe the state of M&A today? And what do you think about this kind of like current state of consolidation in the market as it pertains to, giving itself to M&A happening?
Yeah, no, great question. And just to make my compliance team happy, I do have to say, nothing I say here, it should be considered financial advice. Everything I say is kind of my own opinion. But yeah, I mean, listen, the M&A landscape is really interesting. It's busy on both like the TradFi side and the crypto native side, right? And what I'm actually seeing is like in boardrooms, in management team conversations of like the traditional financial institutions like your banks and your asset managers and your insurance companies, they're all having the live conversation of like, all right, what do we do with crypto? Like, how do we incorporate crypto rails or crypto products into our entire workflow? Because obviously it's a huge market. A lot of people made a lot of money in crypto over the last several years. So like, how do we tap that? And they haven't tapped it because like crypto has had two big issues, right? Over the last, several years. It is regulatory and distribution. The technology was never really the hard part. Not saying that it's easy, but you get a couple of engineers at JP Morgan and they can put together a really nice digital asset product. As a matter of fact, they have an internal payment tool called Connexus, which used to be called JPM Coin that at this point is transacting billions of dollars of intercompany and interbank payments that settle real time. Right. So JPM is using crypto very, very live. And so the hard part for crypto was regulatory and distribution. The regulatory piece, it's kind of figured out. We have Genius, we have Clarity. So all of these big institutions with a lot of capital, and guess what? They also have the distribution. They have millions of depositors or customers and clients that they can sell those products to. And now that the regulatory window is open, they have the distro and the tech. Hey, we can just build it. So they're in this, what I'm calling like the build or buy mode. And I think you mentioned the CEO of Blockworks, Jason, right? Came on and said that there's the acquirers and the acquirees. That's definitely happening, not just within crypto, by the way. It's happening within TradFi and crypto, right? For example, Bullish acquired Equinity. I'm not sure if you saw that transaction, but Bullish, we know, is kind of an institutional prime broker and trading shop. Equinity is one of the oldest and largest transfer agents in traditional financial markets. These transfer agents are highly entrenched into the entire equity capital markets ecosystem. But it's a super antiquated business model. And I mean, I deal with them all the time. It's like processing paper, phone calls for validation and confirmation. What is more ripe for disruption than that through blockchain? So that's happening very, very actively.
And so when you're speaking to different kind of firms that are looking to do these transactions in acquiring companies in the space, we're kind of at that moment in the space where you're going to start to see more and more of this because, people are going to try to catch up. And as I said, it's build or buy. What are some of the most highly sought after companies or sectors within the digital assets industry right now? What are some of the companies? Is it like data companies? Is it media companies? Is it auditing? Is it service? Is it blockchain level? What are the primary targets for acquisitions from some of the largest financial firms in the world?
So the single most sought after has really been the licensed companies. So companies that have broker-dealer licenses, that have DCM, DCO licenses. So DCM, DCO, that kind of that stands for the derivatives capital markets, and FCM for futures. We're seeing a lot of folks trying to dive into the poly market and Kalshi, these prediction markets, and those are technically derivative and futures markets. So those licensed entities have had a massive run up recently and a lot of interest. And then the banking licenses, right? So you've seen Kraken and BitGo and Anchorage, et cetera, all get these OCC licenses so that they can actually take in deposits and offer cheap capital and cheap funding for their clients. The tech part, I kind of mentioned it, not that exciting unless you have something really, really unique. For example, Bridge, right? Like Stripe acquired Bridge because they were highly entrenched within kind of the stablecoin ecosystem. And that's somewhere where I think a lot of people are playing. The other piece where I think you might see some interest is, the exchanges, like crypto exchanges. I think it's probably a little too early for that right now, but there are certainly conversations, and I'm not going to say any names, of larger type exchanges or brokers in the crypto space that are having conversations with the big firms that anybody here would have heard of in order to make that acquisition.
And those firms want to offer crypto trading and these assets to their clients. And
Correct.
Yeah.
Correct.
Yeah. And so in the lens of this kind of Blockworks acquiring Messari conversation, in the more of like the bearish period here, because we see a lot of the TradFi firms coming in the bull period and kind of FOMOing and just buying, to stay up to date. But in this more like kind of depressed market for some of these businesses, we speak to a lot of like conferences and their sponsorship dollars are coming down. Truth be told, it's not been like a 10x year for us. It's been a bit more steady. And a lot of the kind of companies go through these like phases here. Is the M&A market slowed down quite a bit inside the industry, right? Aside from Blockworks and Messari, in the last month or two, I haven't really heard much. What's actually happening inside the industry as it pertains to acquisitions, or is it mostly just a lot of kind of like TradFi coming in and looking to buy industry companies?
Yeah, I mean, listen, I actually think that there's been more activity than people realize. Right. So Kraken, for example, has been acquiring a bunch of different companies, not all crypto companies, by the way. And that's because they're diversifying their business base to be more than just crypto, which is the right thing to do.
Yeah.
I kind of talk about this K-shaped economy within crypto, and people talk about the K-shaped economy that's going on right now, driven up primarily by like AI acceleration, for example, right?
Yeah.
Where the top end of the K, you have a few people, and the bottom end of the K is everybody else.
Yeah.
Crypto, is going through something very similar, where the winners are kind of at the very top, and there's fewer of those, right? So the folks that we're talking about, like Kraken, Coinbase, Circle, some of these other stablecoin companies, and everybody else, right? Like these crypto companies and L1s that were competing, against Ethereum and Solana, they're kind of dying off a bit, right? And the other thing is like there's a lot of these validators out there, these sequencers who, they're maybe making 15, 20, $25 million of revenue, but that's coming down because a lot of the, they charge on basically on an AUM basis.
Right.
AUMs are down. And then the bigger firms have started to realize, hey, actually putting up these validators, it's not that hard, right? Like you get a couple of servers and you put them up and you run some software and boom, all of a sudden you're validating. So what I'm kind of telling my clients now, like you're not getting any growth capital. VC is no longer funding you at your stage. They're either looking very, very early stage or pre-IPO rounds like the Kraken deal.
Sure.
Or they've completely, a lot of crypto guys have like completely pivoted into AI or robotics, right? So we're missing that growth capital. And what do you do at that stage? And the answer is you either look for an exit, whether that's M&A or whether that's going public via IPO or SPAC or whatever else to actually find liquidity. Because if you don't do something today, you and your shareholders are probably looking at a zero in 3 to 5 years' time.
Yeah. Interesting. One of the notable SPAC or public offerings that we've seen that, for a team that we've talked about and covered a lot of Securitize, I think you've seen their recent SECZ public initiative. It's some form of a SPAC or some public vehicle. Any words there on like what why Securitize would choose that sort of route to go into this public vehicle? Perhaps they weren't big enough to do an actual IPO, or there was a specific way to conduct this transaction and offering. Just like curious, because I know that they've been working on that for a while. What's your kind of take there?
Yeah, listen, the SPAC product is a really interesting product, and we at Cohen, we do a lot of like SPAC M&A. It's effectively just a reverse merger and another way for a company to access the public markets. Okay. And the reason you typically do that is you have more certainty of execution. You don't have to, and not to get too technical here, but with traditional IPOs, there's usually, what we call the IPO queue, where the large banks who are lead left book runners of these transactions, they kind of have a priority list of companies, right? And right now, all the big banks are focused on SpaceX, Anthropic, Databricks, like these mega IPOs. And if you're a mid cap to small cap company that wants to access the public markets, going via traditional IPO, it's just going to take a lot longer, and there's more risk that you won't actually go public. With a SPAC, you almost guarantee. Of course, you have to go through the SEC review process, and if you raise in a pipe, you go with investors. But it's a much more de-risked process to access in the public markets.
Got it.
And why do you access the public markets? Liquidity and being able to raise capital in order to help the business grow. Yeah. So that's, and I know the Securitize team fairly well. Carlos and I go back a few years now. And the reason that they went public is really because of, hey, let's go, put Securitize on the map, become a publicly traded company, have this, validation of the markets, get some growth capital, and help tokenize the world, which is kind of their, their play.
On this IPO talk, man, can't help but to talk about SpaceX here. In the kind of like crypto perspective was on the IPO pricing, right? And so Hyperliquid had a pre-IPO market for SpaceX that was much closer and pretty much nailed the exact launch price. Whereas on the buy side, the price that Elon, and the SpaceX team had with the large banks was $135.
Yeah.
This thing launched at 165, 171-ish. I think it was closer to 171. Hyperliquid had kind of nailed it like perfectly and has become a barometer for pre-IPO pricing. How much do you think the large banks will actually mold their, because if basically they made a lot of money on that, banks did, because they set a really low price and obviously it launched quite higher, it was way oversubscribed. So how much do you think these on-chain pre-IPO markets, specifically on Hyperliquid, could affect pricing of IPOs in the future? Like, do you think there's a world where entrepreneurs, CEOs of these large companies could actually point to some on-chain pre-IPO markets with decent amount of trading volume and be like, look to the banks and say, hey, like, this is where it's actually trading with people who are trading and putting up their capital. The price you're quoting us is far too low. We need to meet somewhere in the middle, so we're not just losing, an extra $20 billion of our capital because you guys are giving us a really low price, so you guys can maximize your, investors' returns and your returns. Do you think that's a feasible outcome from your, viewpoint of how this works, or is that just kind of like fool's theory?
No, I think it's, first of all, I think Hyperliquid is a really interesting marketplace to find the right pricing, because it's the deepest, on-chain liquidity market, and they're adding real-world assets on top of, the perps that they do for crypto now. There's the S&P, there's NASDAQ, there's oil futures, right? And of course, there's these pre-IPO deals. Cerebras, for example, was on there a few weeks ago. They nailed the pricing for Cerebras. They're doing the same thing for SpaceX. I just want to clarify, right? Like, banks don't necessarily make money on the difference between the IPO price, right, the 135 that they were going out at, and then whatever it actually listed at, which was like 165 or 170. Banks aren't necessarily, they're not making the spread between that. Banks make money on the total capital raised as part of the deal. And I think they raise like $75, $80 billion, which, by the way, you nailed it. They made a lot of money, but I just want to make sure that the listeners know it's not on that spread.
But then somebody's making the money. It's the IPO investors who are making that money.
The IPO investors, once they resell into the market, yes, they will do that. But it's the investors that come in and back the deal.
Isn't SpaceX theoretically like not raising at a high enough, like they could have raised that capital at a higher price to sell less equity to get that capital.
Totally, right. But
that's the idea.
That's right. The initial investors that came in to underwrite the deal, they said, hey, what we're willing to clear the price at is 135.
Right. Okay.
And so then afterwards, it started trading in the secondary market, right? On the exchanges where people can buy it on Robinhood and eToro or whatever. And people have driven the price up.
Right.
It's got that much demand.
Right.
That in the secondary market, people are moving the price up.
Right. But okay, so then it would be the investors who would be trying to set this buy side price of 135 because they know that it's way oversubscribed and that's probably a good price. But then it would be whoever within the SpaceX team who's handling this, CFO or whatever, pointing to something like Hyperliquid and being like, well, guys, like, we're trading at 175 right now with $50 million of volume in the last 24 hours. I know that's obviously, peanuts compared to what this thing's going to trade day one, but maybe there's a way that we can get this thing up.
Yeah. I mean, I don't think we're there yet.
Yeah, exactly.
But I think Hyperliquid is becoming more of a legitimate venue for liquidity. And I do see a world where, probably pretty soon, issuers, meaning companies like SpaceX, are gonna come and say, hey, listen, we're trading at 30% to this IPO price on Hyperliquid.
Yeah.
I think we have room to move it up.
To negotiate.
But again, it's all based off of the investors. Like, the bank's job is to maximize the IPO price. Right. So that 135 clearing price, if they could have gone higher, they would have. Right. But it's about the investors that come in. I'm talking about the long only guys, the big,
It's like Jane Street and these types.
Yeah, Jane Street definitely participates, but even like the more fundamental investors like Fidelity and BlackRock and T. Rowe Price, right, who come in and underwrite these deals.
Yeah.
Now, I don't know, like I didn't take a look at the book. I don't know if those names got in there,
right.
Just illustratively speaking.
Right.
They're the ones that really clear the price.
Right, okay. And those guys are not going to be too happy if this little dinky crypto exchange is killing their profit margins.
Yeah, I mean, some of them, like the long onlys, they'll hold on to the stock, right? So they're not necessarily flipping, but for sure, there's IPO investors that go in, they underwrite the deal, and then they'll get out of it within 6 months.
Yeah, and what did you think about the way that SpaceX launched? People are in the cryptoverse calling it the high FDV, low float shitcoin playbook. The couple percent float on the stocks, things trading at like $3 to $4 trillion fully diluted market cap,
it's
if
like
you will.
4% of the float.
But 4% of the float is tradable. We got this 30% rip overnight. Now I don't know what.
That was because of Cursor, right? I think somebody got wind that they were going to announce the Cursor deal. Did you see that?
Okay,
I
didn't see
don't
that.
know. I don't know if listen, I'm just speculating.
No,
here,
I hear you though.
But like, why would SpaceX rip 20% overnight?
Yeah.
And then the next morning, you have this announcement that they're acquiring, Cursor.
So things trading at 213. I was sitting in the office here last night. It was 8 p.m. and there was only one guy left here, and we were just watching this thing on Hyperliquid, and we were like, "Holy shit!"
Yeah. Did
Ticked
you buy?
like 230. No, I stayed away. I mean, my expression of bullishness on these is just holding specific crypto assets that are powering this trading. Hyperliquid, Lighter,
I like
things
Hype
others,
a lot.
etc. And so, they changed the rules for SpaceX specifically, and then they come out and launch with this like very low float kind of shenanigans.
Yeah.
And I saw a post that was like, I think CT is going to outtrade retail on this because they're just used to trading stuff like this, right? And so, yeah, just broad strokes takes on the way that they launched it. Is OpenAI and Anthropic going to see the success in the first couple of days and be like, well, we want to launch that way as well? The rule changes, just generally like for the sake of the health of the markets, for retail investors, for the IPO investors, what happened here?
Yeah, I mean, lots of different thoughts here, and I wasn't on the deal, so I don't know the exact mechanics, right? But from the outside looking in, and having done IPOs and SPACs, I understand how this stuff works. First of all, you got to realize they went out at a 1.75 or $2 trillion valuation. Yeah. So even 4% of the float is a massive, massive amount of shares and volume that's traded. Yeah. Right. So like, if you are the issuer and the banks advising this and the exchanges, right, and the marketplaces, you don't go to $2 trillion companies and say, hey, let's float 20%, because that's going to suck up so much liquidity from everything else that it could potentially cause a cascade that is unintentional.
Which people were saying was going to happen.
Right. And listen, what was it, a week and a half ago, 2 weeks ago, we saw a drawdown in the markets, right? A lot of it was like the AI companies that were running up these supply chain bottlenecks, et cetera. They dipped 15, 20%. NASDAQ was down 3, 4, 5%. People were saying there's a few reasons for this, like the Iran war was starting to kick up again. And then also SpaceX is coming up. Yeah. And investors are prepping to be, so they're selling some of their positions in order to do that. Now imagine if they floated more than 4%, what would have been the outcome of, people selling to buy the stock? Could have been even worse. So like, that's one thing that you have to consider. But like, you make a valid point. I'm actually, I'd probably spend an ungodly amount of time on X. Yeah. And it's funny that I'm seeing a lot of like of crypto Twitter talking about, SpaceX and moving more into TradFi
100%.
Because of like Hyperliquid and Lighter and like these perps that are on RWAs, but also because like there's nothing's happening in crypto. It's dead.
I mean, this is the biggest IPO in human history. I mean,
human history.
How could you not,
I saw, I don't know, I forget who it was, but I saw someone post like the unlock schedule.
Yeah. Tell us about it.
Of SpaceX. I don't remember it, but like it just, all these IPOs and de-SPACs, right? And companies that go public, their insiders have lockups. Yeah. And that's where the crypto got the idea. Right. Like, I don't know, like if people are crypto native and really didn't deal with, traditional equity capital markets, that's not like a crypto revolutionary idea. No. That was borrowed from equity capital markets. Why? Yeah. Because, if people list the token or the stock and you sell right away, you don't have the liquidity there and it's going to, rug pull
Right.
using CT, crypto.
But what's
language.
going to happen this time is it's going to just have the slower rug pull in the future because
Yeah.
all the float's going to come out.
It's very, very typical. Like if you follow all of the IPOs,
Yeah.
especially recently where most of the valuation appreciation comes in the private markets,
Right.
Like the Facebooks and the Google. I'm probably not Google actually. Google was still in the day when
But like Stripe and OpenAI and all of these.
all
Yeah,
these
yeah.
recent companies that went public, they went public at kind of the highest valuation, and then 6 months later, you're going to see a drop in the price. Right? Why? A lot of that is the unlock schedule that tends to happen
It's
6 months. Depends. It's negotiated, but the standard is 6 months.
6 months, and
Sometimes
then
9
you
months.
get like a 6 month cliff, and then it's typically fully unlocked or majority unlocked for.
It's unlocked for a lot of people,
Yeah.
but then if you're an insider, there's other rules around insiders. Like if you hold whatever X percent, it's like 5 to 10% of the position.
Yeah.
Then you have to, you can't just sell all your shares. You
Right.
have to disclose it. There's a lot of regulation around that.
Of course, yeah. So SpaceX has a very low float. It has still an incredibly high market cap for an asset, but in the total terms of its fully diluted market cap or full.
Yeah, but what is that? $800 billion or something like that of float? Like
No, it's not even that. It's significantly less. It's only like $100 billion asset right now.
so it's like 4% of 2 trillion, so 80 billion.
Yeah, 4%. Yeah, exactly.
Right, but that's still,
that's
80 billion is a very big company.
for sure. But it's it's SpaceX. It's like But the point is like Elon's illiquid net worth went up Warren Buffett's entire career earnings in
people,
1 4-hour candle.
Yeah, I saw some funny memes like about Warren Buffett just his slow accumulation and appreciation just get run by. And
1
laughed
4-hour candle on hyperliquid at 8
Yeah.
p.m. last night. And I'm sitting in this office looking out at the skyline, wondering where it all went wrong.
It just as easily as it went one way. We know in crypto, low flow and there's going to be a lot of liquidity here, but it can go easily the other way.
Yeah.
And part of the reason why they changed the rules, I don't know, I'm speculating here, but being able to include them in the index, that forces natural buyers like
From day one, right?
Yeah. I don't know if it's day one, but pretty quickly, you're talking about 401ks, pension funds, 503, whatever, what is it? The student plans.
Incredible capitalism. Your mom and pop are buying low float, high FDV SpaceX IPO without even having an option.
Yeah, but on the one hand, yes, but on the other hand, depends on your view on Elon.
Of course.
Like what he's doing, in my view, is incredible.
Okay.
Right? He's like going. I'm saying with SpaceX now. I'm not talking about the dynamics of the what they did with their IPO.
Keep going.
But expanding the frontier of human civilization, trying to capture solar energy to minimize our resource use on Earth, and make intelligence as affordable as possible.
Yeah.
Now there's go ahead.
Do you see a Tesla SpaceX merger coming to fruition? And like from your experience, dealing with M&A, what would that even look like?
It'd be a mega M&A.
Mega.
But I don't know. I don't follow Tesla as much.
Yeah.
But there's inkling. Why wouldn't he?
Yeah. I mean, SpaceX is dramatically larger than Tesla now, if I'm not mistaken, right?
Yeah.
Like massively larger.
Yeah,
like
multiples.
it's pushing on Nvidia's valuation.
Yeah.
I mean, it's still got a ways to go, but
I think it's fourth largest company
insane.
as of this morning.
Yeah. What is all this? I mean, I just can't help but think all of this excitement and just hype. I mean, this has to come back to Bitcoin in some shape or form.
Oh man.
I mean, come on. We got a $2.5 trillion asset trading like a newly launched shitcoin on Hyperliquid last night, and Bitcoin's just kind of like dingling around.
Yeah, listen, I mean, you like to think that Bitcoin isn't going through its 4-year cycles.
Yeah.
But it kind of is.
It is.
Like if you're tracking it, it kind of is. And whether that's, because the crypto investors just make it happen, or whether that's just the reality of I don't know.
Yeah.
Like if they're making that happen or if it just happens. But I think we're probably seeing a bottom. We're close to a bottom right now.
Yep.
Liquidity is in the more interesting asset classes right now. SpaceX, Anthropic, AI, and CPUs, GPUs, like all the whatever, like
Semiconductors,
Intel, the semiconductors, AMD,
Micron,
Micron, everything's blowing up. All that is being drawn away from crypto. It's being drawn away from a lot of different asset classes.
100%.
Yeah, once people sell out of their positions, make their profit, where are they going to go?
Yeah.
Right. And I'm a Bitcoiner through and through, always have been, and I think everybody should own a little bit of Bitcoin. I think ultimately, companies will start adding more Bitcoin to the balance sheet. SpaceX has like
a ton, yeah,
like 8,000 or 18,000
or
something like that.
Ton, yeah. Christian, man, what a conversation, man. Thanks for your time. I know you got to stop here, but incredible to hear about the just state of IPOs, M&A in crypto outside. Truly a wild week for SpaceX, for investors, and all these assets. So thanks for your time, man.
Yeah, thanks for having me.
Appreciate you coming out.
Yeah, of course.
Guys, we'll be right back. Rob and I are going to talk markets, talk our thesis, talk about what's happening, what we're seeing out there. We're going to get Christian sorted, and I'll be right back on. Don't go anywhere. See you guys in the chat. I'll answer all your questions. I saw you guys in there. Much love. Be right back. Bitcoin bouncing, Rob. Hype back at 74.6, 74.8. Ladies and gentlemen, Per looks ready to go. Yo, that was pretty fun. Christian was sick. He has a lot of IPO experience and a lot of takes on what's happening there, Rob. NOC, I didn't get to ask this. Does he see it likely that crypto projects networks will start consolidating and attempt to survive? Yes. I think just from the media landscape, Rob and I have fielded more like, hey, you want to work together on this offer? Or like, hey, like you want to do something together or sell an offer together more than we have ever in the bull. And so I wonder if bigger chains will ever buy up smaller chains. I mean, I think it's possible. It's kind of weird when you have like a chain though. Like it's kind of hard to consolidate chains, I guess. But yeah, that was sick. I mean, I just feel like my bull expression for SpaceX was long, full port, hype, and purr. And I just felt like, dude, Rob, I don't know. I felt like SpaceX would have been a layup, but obviously you say that in hindsight, you know?
Yeah, of course. I mean,
Like it felt like a layup.
it's tough to kind of look at it. And, I mean, who knows, man? Like whenever you have this thing that's looking like it's going to launch as one of the top companies to ever exist.
Yeah.
Yeah, in hindsight, I mean, it was a layup. I guess you could have bought it at like 150. Now it's at like 230, right?
Yeah.
So that's definitely some gains right there.
Yeah. I mean, it's at 212 right now. I'm going to pull it up. Look at this thing. I mean, there is just quite the move here on this thing, right? I mean, 212.
Yeah.
I mean,
pretty
wow.
nuts.
I mean, just straight up only low float high FDV shitcoin launch. I mean, what'd you expect? I mean, so what? So what's the thesis here? Like, is the thesis like it's July now, 6 months from now, you get some sort of market slowdown and the unlock? So is it really like something crazy like this and then like this? Is that really like the chart that we're about to see? Like, are we really going to trade SpaceX at 400?
I don't know if
You know what I
SpaceX
mean?
400. I mean, the rest of the market would have to go ballistic. I think you also have this confluence of like the Iran war ending. You know, if we didn't get that, then markets in general wouldn't have the bullishness that they have now. So
Yeah, I agree.
It was pretty
It
impeccable
would have
timing.
probably been like a sell the IPO thing if we didn't get that news.
Yeah, exactly. It could have been. And then we also have the fact that SpaceX is going first, and then you have Anthropic and the rest of them coming later.
I think that is big.
Yeah,
I
it's
agree with
huge.
that.
And so I think as more of these come online, you know, it's going to have more and more liquidity overhang, whether it's the unlocks of SpaceX itself or you have Anthropic and OpenAI coming online. Either way, it's more supply. So
Somebody says, how much are you investing in Elon? NOSC, elephant in the room. What happens to all that value if Elon ... goes away? To what extent are they investing in Elon versus the company?
who cares? Elon is the company. Like, you know, it's not like he's running a decentralized platform here. Like, this guy's not Satoshi, you know, like you're investing in Elon, and, you know, people, when they were investing in Apple, were investing in Steve Jobs. This is how companies are run. So, man, that chart
Guys, I have to admit, Rob, I almost got bear pilled right here. I almost missed this move, guys. I gotta tell you, guys, so like we were talking about PER, right? When we had Shamus on the first time. Let's see, what was that exact date? What was that exact date that we had Shamus on? David Shamus.
that Thursday, right? That Friday? Yeah, it was that Thursday.
No. March 29th, 2026. First time we had Shamus on. March 29th.
Well, he came on virtually.
He came in person.
No, he came on
had
before then.
Shamus on.
He came
at
on
$5 per.
He came on before then, before PER even launched. I chatted with him virtually when he was just finishing up the fundraise. We were talking about how he was going to deploy the funds. This was before PER even launched.
Wow. So Rob's talking to him over here. Over there. Let me pull it up. So Rob, you're talking to him over here. Hold on, guys. So Rob's talking to him over there.
I think it was in December, yeah.
And then we get Shamus back on the show here in the studio, March. It was like the second week of being in the studio. $5 per. And I'm in at like 5 something, 4.8. I sell my coin. Only like 20 grand worth. So it's like a baby bag. And things starts going. Things starts going. I get a little scared, but things goes. Dude, and then right around here, I'm just like, I see capital flows. I find capital flows account. And I'm like, bro, this guy's saying it's his biggest position and I'm stuck in this uranium trade. And I'm like, fuck, dude, I cannot be stuck in this uranium trade. And then so I go full port here. And bro, in like a matter of days, where do we even go? I mean, we just go, I mean, it wasn't even a real move. It was like unreal. It was a 60% move. So I'm like off my ass. Like the company's burning down in flames in Telegram. Like Robbie's pissed. He's like, why did I not full port?
Buddy, I'm in hyperliquid spot.
And then, bro, 34% drawdown. Everything wiped. I mean, I'm still up like maybe 10%. 5%. 5%. And I'm like, bro, I am fried. And so I'm scared. And so I sell a little bit. I sell some more. Hype's down to like 53. And then something changes where I'm like, dude, mama did not raise no bitch. Like, I am not missing this generational move to $100. And so we just full port back in, across the whole board, full port hype and purr. And I mean, Jenny pump again. And what are we gonna do this time? We're just not gonna sell right now because the dynamic is different this time. Should I have sold right here? Yes. Clearly should have, Rob.
Not necessarily. You could have just held all the way through. You didn't have to sell down there and rebuy back in.
But this, yes, you're right. That was a mistake, and thank goodness we got out of uranium. First of all, I mean,
yeah, that's a good
come
call.
on, uranium's just. I mean, do you want to see the uranium chart?
I don't think I do.
I mean, dude.
I mean, your time. Oh, we're retesting that. We'll see what
little
happens
like
here.
Resistance retest broke down the wrong way. So guys, I had a fat bag of this, and right here, I just sold it. I was like, I'm out. I can't take it anymore. Anyway,
heard a lot about
that's
that
the
position.
Per story. Where do you think this trades, Rob, this week? I think easily 80s. I think easy 80s, low 80s. Could go into the 90s.
Hyperliquid looks like it's written. It's $100. It's foretold.
Yeah.
I mean, it looks fantastic. I don't think that there's anything that's going to slow it down. I think we've got obviously you're the technical analysis guy. I'm the fundamental analysis guy. This is the balance that we've been playing out over the show. And we've got two cataclysmic, like both to the positive or negative side. Something's going to happen on Wednesday. Prepare yourself for volatility.
Yeah. What's your take on that, Rob? Do you think I say no rate hike? I say nothing.
I mean,
I'm saying nothing.
Yeah. Obviously, it's going to be no rate hike and no rate cut. It's more.
Wait, obviously? I thought market was pricing in some cuts.
The cuts?
Or sorry, hikes.
They're pricing in hikes later in the year.
Okay,
They're
so
saying
we're not getting anything then.
No, it's 100% on Polymarket call sheet. No change to the rates tomorrow. The market was pricing in two rate hikes by the end of the year, sometime before December. Now people are starting to come around to the idea after the Citrini article that Kevin Warsh is going to be a little bit more dovish than people had previously imagined. They were thinking that he was going to be this super hawkish, no more assets on the balance sheet, no more quantitative easing sort of Fed chairman. Now they're coming around to the idea that, hey, he's actually going to be a bit more dovish. It really depends what we're going to see on Wednesday. I think we could still get rate hikes. I do think that he's going to come in a little bit more dovish than people are realizing, but it's a total toss-up. I think people are really, really neutral at this point. But we're going to get some volatility, nevertheless.
Yeah.
And so, I think now that we have this deal in place with Iran, we have the opportunity to look through inflation. Previously, he would have had to been hawkish on inflation and at least signal that he might hike rates in order to squelch inflation. But it's not really the case anymore. If we have this deal and Iran war is coming to an end, we can look through the inflation that's already making its way to the supply chain. That is going to make its way through. If we have no more war, then there's going to be no more upward pressures on inflation. So now we have downward pressures on inflation. That's all he needs in order to be a little bit more dovish. I think that's what we get. So if we can get by Wednesday, okay, then we're going to be okay. And then Friday, we're going to come around, and I actually think that they're going to sign this deal on Friday. It's not going to be the ho-hum, everything is jolly, we have world peace thing. There's going to be plenty more negotiations after, but I think we're actually going to sign this deal on Friday, and I think we're going to close the week on a positive note. And so if we can get by tomorrow, positively, somewhat dovishly, then I think we're going to have some good momentum going into Friday. I think we're going to sign that deal on Friday, and I think we're going to have a ton of momentum heading into the weekend.
Dude, so check this out, Rob. Number of rate cuts in 2026. First of all, I agree. I think this is going to be, hype might hit 100 this week. Number of rate cuts in 2026. Market's pricing 71% of zero cuts.
How many hikes?
Okay. Next Fed rate hike, 60% before July 2027, which would be this meeting.
Do we have a market for how many? No, that's July 2027.
Oh, yeah, you're right.
Do we have a market for how many hikes we expect?
So first of all, Fed decision is going to be no cut, no raise.
Right.
How many Fed
do we have
rate
hikes?
changes? I don't see it.
All right. When is it saying the next Fed rate hike? Before 27? That one just under.
Sorry. Which one?
You were just there. The one on the top right. Next Fed
rate hike before July 2027, 60%.
Are those the only two options, before 2027 and before July 2027?
Yeah, they're way zoomed out, and
do we not have it before the end of 2026?
No. I need to find it. What about closing soon? Fed decision. These are all for tomorrow.
You on call sheet or poly market?
Call sheet. Poly market wasn't loading.
Yeah, let's see.
Sort by volume. Number of rate cuts in 2026. Here we go. Next Fed rate hike. Oh, that's the same thing though. Before 2027, 30. Here you go, Rob. Next Fed rate hike before 2027, 35% chance.
I mean, so markets are totally at par. You're pricing no Fed rate hikes before the end of the year and no Fed cuts.
Yeah, which would be bullish,
if
right?
We just keep things the way that they are. If you truly think that rates are high enough to combat inflation, which the end of the war would help that.
If the war ends, dude, we're Gucci.
Then inflation would probably come down and we wouldn't need to raise any more rates. Then it is dependent upon what they do with the balance sheet, which we'll see.
Yeah. Freedom Guy says rate hikes not going to happen. That's fake news for the masses. Yeah, rate hikes are priced in for later this year. New Type says.
Yeah, 36% for the Fed rate hike by the end of the year. In October, September meeting. Yes. So
dude, this is so funny.
Okay,
bro.
so 1% chance by tomorrow. We know that's not going to happen. 7% chance that they raise in the July.
All right, so Rob, what are we smashing, bro? I'm pulling up Kalshi. What are we smashing for the meeting tomorrow? Are we smashing anything?
You could take a look at the mention markets.
Nah. I don't want to do the mention markets. I want to hit something on the. I guess, is there anything to really hit? Let's see. Closing soon. How many dissenting votes? That would be crazy if we got one at 20%. That would be a big hit. There's no point in betting on this. There's no point really in betting on this. This would be crazy, but impossible to know. Okay, so how about this? 65%, Rob, let me pull it up for everybody and get it a bit more fitting in there. 65% for no change and zero dissents. That sounds pretty probable. That'd be like the most boring, basic level. Or no change and over zero dissents. What do you think?
No change and over zero dissents. I
say no change and zero dissents.
I think you're gonna get a dissent.
You think?
Yeah, I do. I think there's.
Really?
I think you're gonna have like these hard line, like alignment guys with Trump that are gonna want to cut. And
Really?
yeah, because I think Moran has been dissenting like every time while Powell was staying the same. And so you got to think like, okay, maybe he just goes along with Warsh because he's the new guy, or he continues maintaining that they should cut just like he was doing with Powell. I think it's more like, I mean, I don't know.
I think it's the guy's first run. Like,
Do you think everyone's just going to bandwagon
give
with
the
him?
guy a break? Like, let him have it. The first one. Don't be on his ass. I'm going no dissents. I'm going 65%. It's not the best odds. I'm putting $100 on it. $100 to win 147. Not really great odds, but I'm thinking they let the guy have it. I'm taking no dissents and no rate cuts. I don't think they're coming after our boy Warsh and just trying to like wreck him. I think they're trying to like ease him into the process, get him be part of the vibe. You know what I mean?
Polymarket's got 0 dissents at 71%. So I think that's probably pretty good odds. You're
Wait,
getting
0 dissents at 71%, but is it also federal funds rate change, no change? Or is it just 0 dissents?
that's priced in for sure. That it's just 0 dissents. So
this was 67%.
yeah,
Kalshi.
yeah. Because I mean, you're not buying anything with not a change.
Okay.
Yeah, man. I think
Well,
that's where
tomorrow's gonna be interesting.
I think that's where we're at. I think inflation is chilling. I think they're gonna come in. There was, part of this was in the Citrini article, right? This macro memo spin cycle, and so they talk about how there is something to watch out for. But they walk through kind of the different things here. The number one thing that you're going to want to watch out for with Kevin Warsh is going to be whether or not Warsh says a certain word. If Warsh says the word, what are we watching? The word trimmed. If Warsh says the word trimmed, so the press conference matters more than the statement. The word to listen to for is trimmed. And
Why
so
trimmed?
Rather, we think Warsh holds until something in his framework. Median and trimmed mean CPI with the willingness to underwrite deflationary technology trends screams higher, and we don't see that as going into the near future. And so because we have this inflation kind of at a higher level, but the idea is that it's going to come down due to the war.
Yeah.
If we can classify CPI, meaning this consumer price index inflation, as trimmed, it means that we've essentially neutered the high end of CPI. We're going to expect to come down. It means he's going to be more dovish than previously thought.
I think he's going to be dovish.
Oh,
I think he's coming out there
prediction.
like, yo, war's over. Trump's doing a great job of ending the war. Shout out to my guy Trump. He's the one who hired me. Rates are staying the same. Things are looking better than expected. So inflation's going to come down. Guys, take it easy.
According to Citrini, our view is that Warsh will do absolutely nothing. The Fed will not hike rates, nor will Warsh immediately push to shrink the balance sheet. In January, when the nomination dropped, it was easy to fall into the consensus train of thought. Warsh was portrayed as the QE critic and hard money essayist, the man whose mere nomination knocked gold down 11% in a single session and put a bid on the dollar. Now that view seems stale to us. Warsh spent his confirmation telling anyone who would listen that trimmed means look fine and that AI productivity is disinflationary. Loretta Mester expects his actual project to be assembling a consensus for lower rates across several meetings. The market has Warsh backwards. In fact, we suspect it has him backwards in both directions at once. Too hawkish on 2026, too structurally credible on everything after. The STIR market has oscillated so quickly between hikes and cuts that it strikes us as likely that nobody has paused to think what a December hike actually looks like. Warsh would need to assemble a majority from a committee that just split 8-4. He would also need to, this is why I think there's going to be a dissent, because there was significant divergence amongst the Fed governors just recently. He would also need to do it against his own published framework, against what would be 5 months of falling spot energy against the president who installed him for the opposite purpose. Don't look at me. Don't look at anybody Trump offered at him, offered at the swearing. in to an audience that did not entirely believe him. Rather, we think Warsh holds until something in his framework, median and trimmed CPI, with the willingness to underwrite deflationary technology trends, screams higher, and we don't see that is going to be in the near future. What we're watching is that in June 16, 17, Warsh's first FOMC, the press conference matters more than the statement. The word to listen for is trimmed anything. If he's looking for trimmed CPI, he's not going to do anything until CPI comes down, and then he's going to cut. In July 2nd is when June payrolls, the first report that can show the real income squeeze reaching hiring. May's strength, for what it's worth, was concentrated in restaurants and local government, which together supplied roughly 60% of the total. That's a labor market coasting on services momentum, and momentum is what real wage compression eats first. So if July 2nd comes and we have June payrolls not as strong, then real wage compression is getting eaten, and we're going to see that in the June 2nd payrolls. Pretty neutral,
So,
if anything, more dovish than previously thought.
I fumbled arrow short just now. Manual close right at the top. Dip just now. Would have been in profit. I would recommend to zoom out, find yourself an entry, buy that damn thing, and sign off for a couple weeks rather than shorting the damn thing. Rob, I think the key takeaway is that there's a high likelihood that Warsh is being overestimated entirely and that he's really just a chill guy. That was my takeaway, is that he's really just a chill guy. And it's not going to be like rash decisions or rash statements on either side.
I think that's pretty accurate. I think there is going to be volatility. I think people are going to be reacting to the press conference. We know there's going to be no change to the rate itself, but I think people are going to be listening to whether or not he's going to shrink the balance sheet. And we know that they're going to ask him that in the Q&A, whether he wants to shrink the balance sheet or not.
Damn, there's some people on Hyperliquid that are up 3 million on SpaceX. 5x leverage long, entry at 164. Oh, $10 million position. Oh, that's nasty, dude.
Well, so they must
that is just nasty.
I mean, it's only a 3x leverage, so
5x.
5x leverage. So what they got?
Dude, this guy's down 356K, 2x leverage, shorted it at 197.
Dude, shorting is just, how are you trying to short this thing right now? Oh, yeah.
Wow. This guy's up 800 bands on a 3x long on 165 entry. Damn.
When's our next guest coming in?
We got Ellie from 21Shares. He's going to talk to us about what's happening in Hyperliquid with their ETF. He's good. I don't like people shorting our assets. No offense, bro. Yeah, for real. What do you mean? Like we're riding this together. Also, guys, like just very simple stuff here. If assets are going to outperform, they will likely continue to outperform. Something
Power
simple.
law.
Something simple just to continue to understand across all time frames.
Yeah, there's a reason they're outperforming. And Andy, while you were setting up the first in-person guest, we had a little conversation about earnings and fundamentals and how you could look at the chart ripping higher and think, oh my God, this thing is overvalued. But if you look underneath the hood and revenue is actually up 10x and the price is only up 2x and the multiple has actually compressed, then it's actually more undervalued, even though the thing has gone up in price because their earnings have outpaced the appreciation of the stock. So, yeah, I mean, that was capital flows making that point with respect to semiconductor stocks. I think the same thing can go for a lot of these AI stocks as we learn more about their revenue profiles. There's an argument to be made that a lot of these revenues are just a big merry-go-round, but Hyperliquid, you can make the argument too. If you have, just in rough numbers, let's say you have you 5x the amount of Hyperliquid revenue over some time frame, long time frame, and the price only 2x's. Well, it's actually not at, and you see 2x and you think, oh, this thing is overvalued. Well, it's not. The fundamentals got 5x better, right? So I'll look underneath the hood.
Time to go bigger, secretly trading. You could probably be working harder, taking more risks than you are right now. Be the differentiator. That's my message to you guys. I'm going to get Ellie set up here in the tower. We're going to take a little break and we're going to get him set up. We're going to talk hyperliquid ETFs and more. He's the head of global research at 21Shares, guys. Don't go anywhere. It's going to be a fun segment. And let's go. I'll see you guys in just a second. Ladies and gentlemen, we are back in the tokenization tower with Ellie, a friend of the show here. Ellie, welcome back to the tower. Good to have you. Thanks for coming out.
Andy, thanks for having me. It's great to be here. One of you.
Great vibes. Hyperliquid all-time highs today as we record this on June 16th, a month after the ETF launch from 21Shares. You guys were able to get that out quickly at the right time. Clearly, there was this pent-up institutional demand for Hyperliquid. I think the SpaceX trading last night actually really blew my mind because we saw, I think, about almost $1 billion or $1.2 billion of 24-hour volume. SpaceX trades from about 175 to 225 at about 8 to 9 p.m. last night. The best place to trade that, to track that, was on Hyperliquid. I think that says a lot about how far this product has came. When you're going through the process of launching the ETF, you guys were one of the first. You and Bitwise, same time, same day, boom, live. How did you guys manage to get this out faster than all these other larger, quote unquote, issuers? The Grayscales, the BlackRocks, the larger kind of issuers, if you will, kind of fell asleep at the wheel here. What happened? Was it just you guys were in tune with what you think the market wanted? How were you guys able to kind of get that out there so quickly?
No, for sure. It's a great question. So we actually launched the world's first hyperliquid exchange-traded product in the European market last year in August 2025. And we knew already that Hyperliquid is a success story. It's a financial market story that the investors really need to have exposure to. In the US, we've seen that there was pent-up demand for this. And we actually launched the world's first Hyperliquid ETF in the US markets a few days before Bitwise, because we really wanted to make sure that the investors really have exposure to this incredible story that we've actually quite never seen before, where essentially we are seeing investors around the world checking pre-IPO markets on specific assets. They're trading on financial markets such as commodities and stocks, as well as equities. And it's super interesting because at the end of the day, Hyperliquid is for us, the Google moment for after market close trading or over the weekend, and it shows again that this is a great product for the U.S. markets.
Yeah, man. I mean, it was the war in January and February. It was oil, or actually, sorry, it was gold and silver in January. It was the war in oil in February and March. Then it was the AI semiconductor crazy Micron SanDisk pumps in the last month or so. And then now it's SpaceX. And so, the story continues to be told. And it's funny how these external events have become catalysts for Hyperliquid in terms of volume, liquidity, and attention. And I think that the amount of people looking at the at the product to get an understanding of what's happening after hours has probably significantly increased. When it comes to these catalysts, if you will, they're not necessarily catalysts for all of crypto, but they have been for Hyperliquid. There's more coming, Anthropic IPO, OpenAI IPO, and just more of this kind of like AI trade happening. How do you think about the evolving, volatile global macro as it pertains to being a catalyst for on-chain finance to really get its kind of feet back under itself and become a place for trading a lot of these kind of volatile moves?
Hyperliquid has really forced markets and traditional marketplaces such as the CME to actually launch also their own 24/7 markets for crypto trading when it comes to options and futures. And I do think that it has become the anchor for traditional finance to also pay attention 24/7 trading, right? And Hyperliquid has really caught the attention, not just for crypto aficionados like you and I, but also traditional finance players to trade on these places, right? Because at the end of the day, Hyperliquid really provides also the blockchain and the API for global liquidity so that marketplaces such as Trade.xyz, but also eventually, I would say traditional marketplaces could build on Hyperliquid eventually to provide 24/7 trading for multiple financial assets. And I do think that this is one of the most successful stories that we've seen in crypto because so far we've seen a K-shaped recovery in the markets where Bitcoin, Ethereum, and Solana have been down year to date, but Hyperliquid increased by over 100% year to date. And I think these geopolitical events are really showing again that Hyperliquid has prepared for these moments and really captured the mind share from investors to be able to trade over the weekend on multiple financial assets that they want to have exposure to.
Definitely. And when you're, so you guys have a vast kind of set of Bitcoin ETFs, Ethereum ETFs, the European version of these as well, and the ETPs across a variety of different assets. You're speaking to investors, you're the global head of research, you're educating the market, whether it be through an email newsletters, through calls, through meetings in person. And you and Adrian and the team are speaking with large allocators, in Europe, also here in New York, and generally, people understand Bitcoin. They understand this digital gold. Some people own gold, some people don't. So some people like it, some people don't. Ethereum, you then start to get into this DCF. What is the fees? What is the okay, this is like a technology stock. How do I value this? And you've got this whole set of other kind of L1s and infrastructure companies. I'm curious, when you've been explaining the value proposition of Hyperliquid to larger allocators, is there a light bulb moment that happens that just makes sense to them compared to other assets when you speak to them? How do they receive the pitch? And what is that kind of light bulb moment for them?
It's a phenomenal question. The light bulb moment for investors has really been the simplicity of the value proposition for Hyperliquid, being this around-the-clock exchange where any financial assets could be exposed to over the weekend, and 24/7 is really powerful. Especially, I would say, in this moment in time after the war in Iran started, we've seen really this haha moment or this eureka moment to really help investors to realize that this is a necessity. Investors wanted to hedge over the weekend out of necessity on Hyperliquid or any other similar marketplaces. And by the way, Hyperliquid is not even the world's first decentralized venue for all financial assets, right? We've seen examples of that in the past, whether it's Ether Delta, if you're an OG in the space, right? That was one of the largest marketplaces on Ethereum at the time in 2017. We've seen GMX and the likes as well, like DYDX. So Hyperliquid has really been able to build this end-to-end platform that is really simple to use for many investors. The interface looks very familiar to a TradingView interface, and that really helped investors to get the story really quickly. And also doesn't feel threatening. It feels like a benefit for them, for their portfolios, especially after market close when we have heightened geopolitical conflicts. So the simplicity in the power of the value proposition has really been, I would say, the high moments for asset allocators around the world, and not just in the US, but also in the European markets as we started there last year.
Yeah. And then that's on the bull case side. On the risk side and the kind of tail risks to this, there's the regulatory side and there's the competition.
Of course.
So right now, Hyperliquid's directly competing with lighter variational on the DeFi perp stack side, Binance, Bybit, and OKX on the centralized exchange side.
Coinbase.
and Coinbase. And then also, looking now at the CME, NASDAQ, et cetera, none of these players are going to go down easy, right? So specifically on the competition risk, how do you explain to investors your thoughts on the competition risk for Hyperliquid?
The Hyperliquid protocol is a decentralized protocol, right? It's globally accessible. Think about it as the internet, where essentially, of course, the Hyperliquid team has to comply with local jurisdictions, where in the US, for example, US persons like you and I cannot access the platform for compliance reasons. But when it comes to the competitive landscape, it's great news because investors can have exposure to multiple marketplaces to have access to financial assets 24/7, especially over the weekend out of necessity. But I do think that what is misunderstood by many investors is that Hyperliquid is also an API for global liquidity. So essentially the blockchain itself can be used by other marketplaces, traditional finance, as well as broker dealers to build on the marketplace of Hyperliquid with the infrastructure ready to go, right? So these are the things that is misunderstood. It really helps investors to see the benefit that this is not just an exchange, but the end-to-end platform, full stack, that really helps the investors to really get the fact that there is a bigger upside for that kind of protocol and product in the marketplace. So they don't rely on a layer one like Ethereum, Solana. They are their sovereign blockchain that really helps to understand that this is both a tech play, but also a financial services play. And that's why I like to call, Hyperliquid this, FinTech 2.0, which is basically financial services built on blockchain rails and not on legacy and opaque systems, right? That we actually have seen for the last 12 to 15 years.
So then, just to get a bit more concrete with it, what is your view on the competition from the centralized exchange side and from the larger trading venues in the world, NYSE, NASDAQ, et cetera? How do you, these, again, these guys are not going to go down easy. They're going to have the guns out. What's going to happen here?
So I think we're going to see two scenarios. The main one is going to be traditional marketplaces going head-to-head with Hyperliquid, and the CME took that route, right? A couple of weeks ago, they launched, Bitcoin, Ethereum, and Solana futures and options over the weekend. The volume was quite considerable, like $50 million in volumes over the weekend a couple of weeks ago. But in the same time frame, over the weekend, Hyperliquid processed $9 billion in volume in the same time frame. So I think it shows again that Hyperliquid is operating on a global scale, except in the US, and that's route number one, where traditional players are not going to be using the API of Hyperliquid to go head-to-head against them. And then the second route would be where essentially a great rising tide is lifting all boats, and you're going to see traditional players leveraging the marketplace and the API of Hyperliquid, so the blockchain, so that the investors will be able to use it 24/7. So from a fee rate perspective, this is great because Hyperliquid can capture that revenue from these traditional marketplaces building on top of it, and that's truly the upside. But that's really risk number one when it comes to the competitive landscape. But when you think about over risk, right, there are technological risk as well on these different blockchains. You've seen the rise of AI-enabled security settings, and that really shows again like the likes of Zcash, where they were able to hire a security researcher to then find out about the inflation bug. I do think that technological risk is still very important to consider, and this is one of them that the investors would need to mitigate. And that's why transparency around security audits would be key for multiple investors around the world to pay attention to that. And then the last one is the regulatory landscape, right? Right now, Hyperliquid is not available in the US markets, but I do think that because the CFTC is also working very closely with the places like Kalshi to allow perps in the US markets, it shows again that there is a pathway for Hyperliquid also to come in as both a blockchain as well as an operating around the clock exchange to operate in the US. So let's see about that, but it's still a question mark for
Yeah, it seems, yesterday, I think the CFTC chairman, Mike Selig, was on TV talking about perps, right? Which is awesome to see.
He did.
Huge. That screenshot and the SpaceX trading volume last night, I think, sent this thing to all-time highs. When it comes to thinking about what this future of this on-chain finance world looks like, right? I think it's clear that we've broken out of the kind of like crypto-only landscape, right? There's 150 billion or so in TVL and DeFi. Total market cap of crypto assets, couple trillion, 2.5, 3.5 trillion. but it's very clear that the total addressable market of what we're doing here is much larger in terms of tokenized assets coming on chain. And so I'm starting to think about a couple of these platforms, Hyperliquid, Aerodrome, Uniswap, Aave, et cetera, Lighter, as much more of like an underlying layer of liquidity and of a product than of a front end. Like I think the amount of people trading on Hyperliquid will continue to grow, but I think that the amount of people that will trade on Hyperliquid without knowing that they're trading on Hyperliquid directly via builder codes, or the amount of people trading on Aerodrome via Coinbase's app will dramatically increase without them actually going to the UX. And I think this provides like a much bigger picture, because it's not like Hyperliquid and Aerodrome and Uniswap and Aave have to go out and get all the users to their platform. They just need to secure the right integrations with Revolut and Robinhood and Coinbase and all these platforms, Telegram, et cetera. And so I'm starting to see more of this kind of come to fruition, and I'm curious how you see this playing out. Your thoughts on like this underlayer of Hyperliquid and of these trading applications on chain, that kind of really permeating into these larger applications with more distribution, how you see that playing out, how quickly you may see that playing out, or what kind of nuances you would see in that.
Yeah, I think there is a big nuance here where you're going to have players that wants to have the end-to-end, I would say, stack for themselves, as like, for example, a Coinbase would want to own the entire marketplace, plus also the blockchain. That's why they have Base, plus the marketplace, and the money transmitter licenses to operate in the US, broker-dealer licenses as well. So this is the Apple, I would say, the Apple strategy, which is to have the end-to-end stack owned fully by the company. And then you're going to have others like Microsoft that would want to externalize the Androids and the operating systems of the world onto their product offerings. And I think the Microsoft route would basically make sense for the likes of Robinhood, for example, to build on Hyperliquid. We could see also the likes of others, especially in the traditional finance space, that do not want to basically build a blockchain, blockchain development team internally. So I do think that we're going to see two routes: either the Apple route, end-to-end, and owning the stack, and then the Microsoft route, where you can basically, to some extent, externalize the operating system through over blockchain teams like Hyperliquid. But I do think there is going to be a nuanced world, and that's totally fine. But I do think that liquidity begets liquidity. So traders and market makers are going to trade only where there is a significant amount of real liquidity for specific assets, whether it's oil, silver, and gold, or even like pre-IPO stocks, or even IPO stocks now, like SpaceX. And I do think that if we're seeing billions of dollars in open interest on a daily basis and billions of dollars in volumes, the market makers are really going to pay attention to these marketplaces, and Hyperliquid is really owning that space right now. But I do think that we're going to see more and more players trying to get that market share from Hyperliquid.
Yeah. You put out a piece, I think, that said 21Shares, and you personally think that Hyperliquid's fair value is $75.
Yep.
We're here now. So, what does that mean? Is it time to dump it all? Like, what's the, has anything materially changed in your thesis for the $75 hype to think that this thing could trade, at 100, at 125 plus? What's materially changed in your thesis, or has it not?
So the time around we published that thesis, we looked at Hyperliquid very closely for the last couple of years, and the price of Hyperliquid when we published that last couple of months was around 30, 40 bucks. And we thought at that time that given the capture that Hyperliquid has been able to get from Trade.xyz and over marketplaces building on top was a great way to think about where Hyperliquid could be. But quite frankly, if Hyperliquid becomes the equivalent of Google for aftermarket close price discovery, where you can find the price of gold and silver and over commodities in real time over the weekend, and that becomes the benchmark for that, the same way Google changed basically the search engine and user experience that we've experienced for the last 25 years on the internet. I do think that the upside for Hyperliquid is incredibly high, but I don't have a specific price tag for you on where this is going to be, but we're incredibly excited. We believe that Hyperliquid could become an asset that actually is valued over $500 billion in total market cap. I think that's really the upside for us, which shows that it could likely become the number 2 asset in crypto after Bitcoin. If it executes really well, if it's able to capture the market share in traditional perps, but also most importantly, if there are no existential bugs on the network that unfortunately will lose the trust of the users.
Yeah. Yeah. The Google of crypto. That's a great analogy. Yeah.
That's our Google moment. What do you think?
Yeah. I mean, I feel like SpaceX is a big one.
Right?
Yeah. Huge one.
When you look at the pre-IPO markets for SpaceX and where the assets traded, very close.
Yeah.
Accuracy rate was over 95% for Hyperliquid.
Yeah. It's insane. Yeah. No, it's just been an incredible run. I mean, it's hard not to be just excited about what is possible from the team, from what's happening on chain. One thing I'm curious about is seeing spot equities be traded on Hyperliquid and a deeper spot market book for non-crypto assets.
Yeah.
Just curious, like your thesis there. I mean, obviously there's large spot markets on chain already.
Very large, yeah.
Uniswap, Aerodrome, and then Solana is kind of dominating right now with a recent launch of a spot SPCX market with Sunrise and Backpack. Curious, like how you think the spot market may develop there on Hyperliquid.
Yeah, I think it's going to be a tougher market, and the reason is because the spot market is the second largest market structure in crypto. And then the first one, of course, is futures, traditional futures, and then perps, and then you've got the spot markets. User acquisition and user retention would be so important for Hyperliquid to win there. It's possible eventually that you could see traditional neobanks leveraging the Hyperliquid platform to actually offer spot markets more specifically. But I think on that side, it's going to be a tougher market for Hyperliquid to win. And the reason is because there are so many options right now today. And Hyperliquid really feels right now like a high-frequency trading tool, not for the moms and pops yet, right? When you look at the interface and how this is structured. So the upside would be if they're able to have people around the space like you and I recommended Hyperliquid to buy Bitcoin or Ethereum, right? Yeah. And right now we've seen more and more people like talking about ETFs in case, or even like just opening up a Kraken or a Coinbase account to buy spot. So I do think on the spot markets, they really have to change the interface and the user acquisition strategy to attract the average Joe. I think that would be incredibly important to expand the pie, for sure.
Elliot, just some closing thoughts here. I mean, market structure as a whole has been pretty depressed for crypto while AI has ran. Obviously, Hyperliquid's kind of in its own bull market right now. When it comes to persisting through the broader bear, how do you think about the performance ability of Hyperliquid and hype the asset with a broader crypto bear? Let's say it continues on for a couple more months into the end of the summer or something. Typical 4-year cycle would say October. How do you think about the mismatch in performance between hype and the broader crypto market, and how do you think it resolves?
I think one of the key catalysts that we haven't talked about actually in this episode is also prediction markets. Hyperliquid is moving to prediction markets, and it's one of the key essential tools that we've seen since the last couple of years, where investors around the world are trying to pay attention to market prices and where they're going and headed. So I do think that the upside for Hyperliquid to continue the decoupling that we've seen since year to date would be how they're able to capture the market share from the likes of Kalshi and Polymarket. Right now, I think the market share on the prediction markets for Bitcoin, specifically on Hyperliquid, is around 5 to 10% of where Polymarket is. So there's still room to grow, which is great, and shows again that there is the pie that could be expanding there. And then when it comes to the world event where Hyperliquid would be necessary, I do think that OpenAI and Anthropic IPOs are going to be key as well, especially if the pre-IPO markets are actually getting really close to where the IPO price would be once they actually get to the public markets for both Anthropic and OpenAI. And these are some of the most weighted IPOs in the markets after SpaceX. So I do think it's going to be quite exciting because people use that on day-to-day for all these AI models. So that's the exciting part for Hyperliquid.
Definitely. Elliot, thanks for coming by, man. Great episode. Congrats on getting the ETF out.
Thank you very much.
And thanks for joining us in the tower, man. Hyperliquid to 3 digits is imminent. So we're going to hang on tight here. All right. Thanks, guys.
we get deep.
Money, power, and
Yes, sir. Ellie in the cut, in the tower. Big Hyperliquid bull. I mean, them and Bitwise got that ETF out like very fast. But it's been a month. It's been a month of ETF flows for Hyperliquid already. Numbers are pretty staggering across the board. I know Bitwise. You know what's crazy is Van Eck launched a Binance coin ETF, and it did like a couple hundred K volume the first day. Major flop. Interesting.
It just goes to show that just launching an ETF is not going to cut it. It needs to have some underlying momentum.
Demand. Ladies and gentlemen, that is the show for today. Thank you for rocking with us, for all the Purr bulls, hype bulls, aerodrome bulls, Ethereum bulls, Bitcoin bulls, SpaceX bulls. All y'all out there, thank you for watching.
Strap in. Tomorrow's going to be volatile.
Oh, Fed meeting tomorrow. Friday signing of the peace treaty. God, if we round trip from here, I'm going to be in shambles.
I think we're going to get some crazy wicks.
I think we're going to get some crazy pumps. I'm going to go home and shave, get my playoff clean beard in. You know what I mean?
All right. I think that's the show for today, guys.
Guys, thanks for watching. We'll be here. Tomorrow's a privacy day. We're starting a little early, a little closer to around 12. We'll have like 8 guests. Canton, ZK Sync, Zama, Zcash, Near, Multicoin. It's gonna be lit. W's in the chat, NOCSM. We appreciate you. W for you. Everybody who's long hype, who's long per, long SpaceX. Well, we're making money. We're definitely making money. I'm not looking at the P&L right now. I already looked once. That was the top. Sent it to a ton. Price has been down only since.
Hey, hop off my boy Atan. Guys,
W's in the chat.
Guys, absolutely crushing it.
Huge show today. Much love, y'all. Thanks for rocking with us. Tomorrow we'll be here, same place, same time with you. We're not going anywhere. We told you we're not going anywhere. Told you we're sticking around. We're surviving. We're going to get long on the right assets, and we're going to ride them all-time highs, and that's what we're doing. We're going to do it together because that's what matters. What good is making money if you're not making money with your friends? Make sure Rob is full port hype. Make sure he sells that ETH. He's going to sell that ETH.
Still got my ETH, still got my hype.
He's going to sell that ETH, guys.
Nothing's changed. Bitmine launches their preferred 9.5% income whenever you want it, whenever you need it. It's available today. I think it might make something happen. Glamsterdam, the biggest ETH hard fork since the merge. Putting the finishing touches on that, going live very soon.
ETH at 1,800.
ETH
is at the bottom?
1,800. It's the stablecoin super cycle.
Did David Hoffman sell the bottom?
Yes.
Ladies and gentlemen, give it up for the roll-up team, the producers, the children screaming, sound, and laughing. What a show. What a pump. Hype to 80s this week, 90s by the end of the month. We'll see. Path to 3 digits is preordained.
I will see you
Enjoy
there.
the ride. Smash the like, smash the sub, hit the notifications on YouTube. Much love for you guys rocking with us. Let's go, Rob. Big day.
See you there.
Signing off.
See you tomorrow.
Inshallah.
Bye.